All right. Tomorrow is the CPI data, so I want to do a quick update to help you prepare for that and how I'm positioned going into it. So the first thing is I want to look at the triple Qs first, because on here we are actually getting what is driving the market, which is still this open gap at 517. The other indices like the Dow Jones and the S&P 500 have filled their gap, and we do have the pivot from the high. So we have two lower lows with these red body candles that look like we are coming down to at least 517 to about 514. So I'm going to move this level up here so you can see that. So 517 to 514 are your very critical support. If we cannot hold that support, then we are likely coming down towards this trend line, which is going to be right around 508. So 514 to 508 if we break down below the gap fill at 517. Now, I will caution you, this is not a time to be getting bearish, because as we come down into that support, we are likely going to complete this bull trend and hit that price target in the 530s. So I'll leave this arrow on here for guidance. This is definitely telling me this is still a market people will be buying the dip in. And if people are buying the dip, you do not want to get overly bearish. You want to actually look for opportunities to put your cash to work, because I did suggest locking profits and raising that dry powder as we hit the price targets, which you can clearly see by the arrows hitting those targets. So we hit the targets, we secure some profits, we start to put those profits back to work at support and continue the bull trend. If at any point price and trend roll over and tell us we're out of the bull trend, then we move like water and adapt immediately. But right now we still have a bull trend that is likely just getting a pullback before we continue any higher to finish out the year. And then very quickly looking at SPY, once more, we hit the price target right there, right on the money a couple of days early at 608. From there, I told you the risk was down here towards a gap fill at 604. We filled that gap after hitting the price target. So if you locked profits and you secured some cash, you're looking to put that back to work down here towards 598. So on the S&P 500, I'm looking for a pullback towards 598 now that we filled the gap and continued lower. And then from there, we're looking for that push higher towards 614 to finish the year. And then very quickly on Bitcoin, we are currently at 96,500. I still think all of the risk is to the downside at 84,000. So I do not think this is a great long trade. We are down below the 20 daily moving average at the time of me making this video. And if we break support at 92,000, it is looking risk off, and we're going to start to flush on high volume. I will remind you that Bitcoin is still bullish longer term, but in the short term, all of the risk is to the downside. And even if we go higher, it's just not worth the reward for all of the risk. So as I continue to tell you in the month of December, don't do anything high risk to ruin your entire trading year. Continue to lock profits and raise dry powder and get ready to deploy some cash as we come into support. And if we roll over and die, we will move like water and get risk off. But this is still a bull trend until it's not, which means higher lows and higher highs. If you want access to any of my services, all of those details are in the comment section below, as well as the description. And the Trade Alert service gives you access to the exact percent allocations that I am going for the TQQQ or the SQQQ. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.